guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Welcome everyone. Thank you for joining Stock Sniper Trading. My name is Ron. My partner is Dave. Thanks guys. It is 10:20 a.m. Eastern, and it is Hump Day, Wednesday, March 12th. So thanks guys for joining. I do appreciate your guys' time. Today we're going to go till just after 12:30 p.m. I do need to take my daughter to a play date. It is March break this week, spring break over here in Canada. So you're trading with dad on spring break with some kids, and I got to keep them busy. So I have to take her to her friend's house for a little bit so she can have fun and play while we're analyzing these markets together. So the plan for today is we're going to get right into the markets, go right through the news. Hopefully some of you guys have already done the news for the day. It was CPI. They already released that data, so we can see how the market reacted when they released it and how the market is moving now, and maybe where it could move this session or later this afternoon. Okay, so real quickly, Forex Factory had their news today. Over here in the US at 8:30 a.m. they released their core CPI, their CPI month over month, and their CPI year over year. It came in pretty good. You can see it's a decrease from the previous month, and it's lower than their forecast. So that is essentially CPI is going down. That's good for the US dollar. How did the markets take it and everything? So that was our first CPI. Tomorrow we have PPI. That's to do with the producers, okay? And then let the market digest all this, and then maybe we'll see how we're going to move into the end of the week and maybe next week. We also have today the Bank of Canada rate statement. So over here in Canada where I am, the overnight rate went down 0.25% from 3% to 2.75. Reason for this is the tariff threats. So the interest rates are going lower here in Canada to 2.75. Okay, just in case tariffs are tacked on. Again, that tariff talk is going back and forth. They're just bouncing it off of each other. Doug Ford, the Premier of Ontario, said that we're going to shut the lights off in US. I don't know, guys, if these guys are just playing games or it's part of their talk and part of their being bullies and things like that. But he was threatening that. Then Trump came back to him and said, okay, if you do that, aluminum and steel from 25 is going to go 50%. Then again, they had they're like kind of like a spouse, you know, where they're arguing with each other, and then we're like the kids in the background that have no idea what's going on, and it's these two adults in the room, and they have no idea what they're doing either. So that's why the markets are moving like this. You might see that they're volatile, up, down, sideways, choppy, this, that, because the markets are still uncertain as to what is going on with these interests, with these tariffs. So again, they relieved it by saying we're not going to turn your power off in the U.S., thankfully, and Trump said we're going to remove those tariffs right now. So again, but they're still negotiating, they're still talking. So the market is still moving, but just be careful as it's moving. In 6 minutes, we're going to have our crude oil inventory. So if you're trading crude oil, be aware of that. Later this afternoon, we have that 1:01 p.m. We have our 10-year bond auction. We're going to see if the Treasury bonds are coming down. If it might be a hint that interest rates in the U.S. are coming down. There's a lot of talk right now that I'm reading that there's going to be $9 trillion of debt coming up for refinancing in the next year in the US. Okay, I don't know if you guys are aware about this, but there's $9 trillion of debt coming up for refinancing in 2026. That's not too far away from here. So what I think the strategy of the US, what they're trying to do is lower the interest rates as much as possible so that when it comes to refinancing, they can refinance for 10, 20, 30 years down the road at a lower rate. And then they can start to pump the markets again. Do you guys understand what I mean? There's almost $10 trillion of debt that is coming up for renewal. And it's like you when our mortgage is coming up for renewal and you got to renew at a new rate. You got to refinance. It's either at a higher percentage, same percentage, or lower percentage than what you had. So it would be a good idea if the interest rates in the US come down lower so that they can refinance for long term and then pump it right back into the markets, and then we're continuing to move to all-time highs. That's just my speculation. Again, I'm a nobody. I'm just a dad here trading on March break, spring break here with the kids, but you always got to think about something. You always got to think ahead. That's my perspective on what's going on with the refinance rate. Okay, and just continuing with earnings, I'll always give you a heads up if there's a big name in earnings. This pre-market, there was nothing big names. After hours, we do have Adobe at 405, and not much going on. American Eagle Outfitters, no big names over here. So let's get into the charts. We're going to get started with gold, XAU USD. I have it on the 5 minutes right now. So it's very, very choppy. It's going bullish, bearish, like very inside. You can trap all that volume, and we haven't moved out of here yet. It could have a probability that it could move back up to here, or it could move back down to here. Right now it's consolidating. So I'm going to start off on a higher time frame on the daily, see how gold is moving on the daily. We have this big massive bull run that's continuing to drive. We're not too far away from the all-time highs on gold, so it's still in reach. This is the all-time high supply up here. We're not too far away from it. You can see like today's high, it's very, very close to tapping into this red box over here. Do we have some good demand area that we can see? Like this area over here, there was good demand that started right in here. If I kind of bring this across, I can start to get this block in here. Okay, so we're still pretty bullish on the daily. We're just getting some consolidation. It looks similar to like those 5-minute candles where it's going up, coming down, going up and down here with spin top, going back down, coming back up yesterday, and we're right up here. Okay, so and then what type of pattern do we see? We see it come down this week, coming down. We see it going back up, but now we're just trading sideways. So we could potentially, again, trade right into that supply. It could possibly come in there and get rejected again. It could maybe impulsively break out of here, okay, for a new all-time high, and then it could get rejected up there, hit those pending orders, and then come right back down. Okay, that's a possibility too. But the daily candle could also close up there through the all-time high supply and maybe come back down, and we retest this block, and it's good demand, it's good support. This will flip to a red to a green box. Maybe it trades up here for a little bit, and then who knows, maybe we're going 3,000 plus. So that is a possible scenario. And we also have the same scenario that could go back down. It could come back down and test this green box, and we're going to see if it can bounce a couple times, maybe come back up. If it can't hold here, maybe it's an impulse break, just like this candle where it impulsively broke down, grabbed some liquidity, came back, closed above the green box, and then we started this little 2-day bull run. Again, same situation. It could come down there, close below there, then we have to flip the green to red. That might be ongoing resistance, and then gold continues to sell down a little bit, or we could just come right back in, grab that liquidity, and then go back up. Okay, so that's a good thing to keep an eye on. Right now it's still consolidating in here. On the daily, is there some points of interest that we can see? I can see right here, yesterday and today, or sorry, on Monday, the start of the week, and yesterday, there's good point of interest on the daily right here. That's where the body closed. That's where body opened, 2,888. We're nowhere near that right now. And then there's those two tweezer bottom lows that started this nice bullish day here. And then where else do we have some points of interest? There's a lot of congestion going on over here. Here's a body, here's a body, a body, a body, like all around here. So if I kind of put a line right around here, you can alter it too. You can put it up there if you like. You can put it down there. You know, you can play with this. It's just try and get as much accurate as possible. So I can see I can cut that blue candle in half. I cut that blue candle in half. I get that wick right there. I get that body kind of closing right there. I get that body closing exactly right at that yellow line. There's where that body opens at the yellow line. Here was a little bit of a break above there. So I'm comfortable with this area, with this yellow line right here. That's where it's trading at right now. 29.16, 29.17. Are we going to get volume above it, continue to fill up these wicks and maybe drive higher, or are they going to bring it down? Another location that I like to look at is yesterday's bullish volume. Where's 50% of that? roughly, excuse me, roughly right around there is 50. And that's at a nice psychological area, 2902, 2900 area. And then now what I do is I just follow today's daily volume. We closed here yesterday. We opened right here. So it's side by side open. Initially, it came down. Okay, so that's our low of the day. It's still above 50% of yesterday's volume. So that's where I place a purple line. We had buyers step in, push it all the way back up, push it all the way back up, where we came back to where we opened, and then they pushed all the way up there. 29.25 is our high of the day. Again, a purple line at our high of the day. And then I see relative to this day, it's a lower high. It's a lower high here, lower high. We're still below the all-time high supply, but the buyers are trying their best to continue to bring it up here. And then we got rejected, and this is where the volume is. So on the daily, we still have 6.5 hours to go, but the majority of the day, it doesn't have a huge range, and then we're trading right back at the opening price. So this is our spin top candle. Some traders say it's a doji candle, whatever you want to call it. Just understand that we don't have too much volume right now, and it's just moving kind of sideways with buyers and sellers. Again, undecided on maybe to go up to all-time high supply or come back down. Now what we can do is we can dissect today's daily candle by going to the hourly. So now we are surgeons here, and we're going to start to dissect the daily candle and figure out where it's making its moves. Look at the hourly, look at how coiled up it is in here. You can start to see specific times of the day, how it was trading. Here's the futures market open up 8 p.m. Eastern, and then I can see pre-London was initial bullish, closed down there. Here's London market open 3 a.m. Europe, come back up. Then that's when we hit the high of the day, was 5 a.m. Eastern, and we continue to push down. And then we had major news this morning, 8:30. There was the CPI data, and you can see also how Wall Street market opened up. So it was Wall Street that hit the low of the day down there, and we were coming right back up. So we're still kind of really tight in here, consolidating on the hourly. Is there maybe some hourly support that we can look at? Right here, there's pretty good hourly support. So I'm going to place a white line in here because I'm going to go into the 5 minutes as well. See why I placed a white line right here? I can see there's a body there, a wick rejected there. There's a body close, body open, a retest right there. There's a body close, an open, a retest. This is the one that broke 2 a.m. Again, it's a major session pre-London, and then London broke down, but it came back closed above. And we continued to stay above this white line. We tapped it, volume above. We just came down this hour. So we're still, so this area, 29.14 and a quarter, 29.15 is still technically holding hourly support. There was a couple breaks, but the volume is still traditionally above here. Where do we have some hourly resistance? I would say right around here. There's the body, a couple wicks right there. Then you see all these impulse breaks that failed with no follow through. This was the first blue candle, bullish candle that did close above. It was 4 a.m. and it extended to hit our high of the day, but then they rejected it right back down. So we're getting a little bit of blue volume, bullish volume coming back up to that hourly resistance, and that's 29.18 and 50 cents. So we'll see if we can start to get some more volume closing above there, and maybe we might have potential to fill these wicks and try for that high of the day, or if it gets rejected, we could be just trading in this range right now. Okay. Do we have any overall big patterns? If you want to consider this entire area as one whole left shoulder here, there's your inverted head where it came down Monday early this week, picked up all that liquidity, came back in. We're still trading inside this, the right shoulder, all of this. So this could maybe technically keep pushing up and try to get into that all-time high supply, but it's very sideways. This type of trading is very frustrating. I get it that everyone is frustrated trading this stuff, but this is what the market, this is the volume it's presenting us. Now, again, it's up to us to decide how much we want to trade, what lot size do we want to use, how many hours do we want to put in trading this. Again, you don't always have to trade gold. If you see how it's trading, you can switch to another security, look at something else, but this is how it's trading right now. So we can't make excuses. We just got to trade with how it is moving. Is there any levels on the 5 minutes right now? So this is how, again, the 5 minutes are consolidating right in those hourly areas, those two white lines. So if I was to trap all this, like just in there, like that, you can see how clearly it's consolidating in here. It will maybe make an attempt to break out of here. And again, it could just be an impulse before the candle closes and comes back in. We could also get a official candle close above there. Is it moving upwards? It is. It's respecting this trend currently. So we'll see if it can continue to respect this and see what will happen at this hourly resistance right here. Okay, so welcome everyone on Zoom. I appreciate all of you guys. Reese, welcome. Thank you for joining. Lorraine, Conrad, Lady Stone, welcome. Julian, thanks guys. Johnny Four Eyes, welcome. Josie, welcome guys. And everyone on YouTube, appreciate you guys as well. Thank you guys. TraderBit, welcome. Tony Gold, thank you. Mahfouz, Jacques, welcome guys. I appreciate everyone. Thank you guys. If you guys wouldn't mind hitting the like button so we can get a little bit more exposure out there, we would appreciate it guys. So we got a 5-minute candle that is opened, came back down to approximately 50% of the previous candle. Now it's breaking. It's a hammer candle breaking through. This candle just opened a minute ago, so this still has 4 minutes to go. So this is the hardest part, is this candle still has 4 minutes to go and it's breaking. So a lot of times we buy the breakout, we buy on FOMO, but there's no guarantee where it could go while it's impulsively breaking, because as it's breaking, it's encountering resistance. It's encountering the depth of market above. So as it's breaking, it's trading right into offers, and you see how they pushed it right back down. So sometimes you have to be careful with these candles, especially on the lower time frame. When you're scalping these things on either the 15-minute, the 5-minute, the 1-minute time frame, they're difficult to trade, because sometimes you take it and then it comes right back down, and before you know it, you're in drawdown. Okay, so rule of thumb is, when in doubt, wait it out. If you can wait for this body to close, yes, you may miss out on a potential impulse move. That's one of the situations. But if you allow it to naturally close, then we get a little bit more information from it. We get concrete information where it closes, and then maybe we can base a trade off of it. At least it gives us a little bit more confirmed information as opposed to just taking the impulse. There is times where you can take impulse trades. I showed that yesterday. Sometimes there is intuition involved. You can kind of feel how it's building. Maybe there was a big liquidity grab prior to it breaking out, and then you're breaking out with that momentum. So there is a time and place when to trade impulse candles, but you have to know when you do take it, the consequences of it. I know too, when I trade an impulse candle, that it definitely has a high probability, no matter how nice the setup is, it could always come right back down and put me either at break even or drawdown. And I understand that. So when you're taking impulse candles, try to lower your risk as much as possible. Then therefore, if it retraces on you and comes back, you don't have to panic. You don't have to, it's a good learning lesson. And when you're not gambling your whole entire account on one impulse trade, it makes trading easier, and then you can trade off of it again. Okay, so right now as I'm speaking, it's right back right here at that hourly resistance white line, and I can clearly see the impulse break. Now we have 90 seconds to go, so we're going to get the official close of the volume. Where will it close? Okay, you see how it came up there, but we do have lots of resistance to the left of us. When did all this resistance start? It started right here at 8:30, the news. And just after that CPI news, and then they really flushed it down right here at 9:15, and then started to rotate it right back up when Wall Street market opened up. So this is going to close now in 60 seconds, and we'll see where it closes. Okay. So now we can clearly see the impulse break, and then it got pushed back down with 44 seconds to go. So let's see if the buyers can bring it right back up and maybe close it here, close it up here, or look at now how the selling pressure has taken control of the candle, and it might come down to the lowest point and turn into a shooting star and push even further. So you can see if we took that impulse trade, you could potentially be in drawdown. Another thing is the pip and dip strategy if you're taking impulse candles. I know it's it's not the style for most traders, but if you measure that, it's 10 pips. So that impulse break was 10 pips. If you were in it and you got your 5, 7, 10 pips and just closed the trade right away, you could have benefited from that move and got out. So there's a different style, but I would definitely practice. So you see how nothing closed above, and it's a very bearish candle right at the low again. So had we taken that impulse, the woulda, shoulda, couldas, we would be in drawdown right now, right? So do you guys think it was a good idea to just wait for it to close naturally, or do you guys think we missed out on an impulse opportunity there? And I don't play the game now, the woulda, shoulda, coulda game. I don't play that. So I see that we made up our mind when this candle was building that we're going to wait for it to close. So I don't really care how high it went, how low it went. My perspective was to wait for it to close, and it's trading again right back in here. Now it's coming down. Will it come right back up with higher lows? Will it continue to build, or is the selling pressure going to start to push it right back down? Okay, so that's a failed attempt right there. You guys got that, right? So you guys all understand that. Everyone understand that? All good? Okay, now what's happening? So it came back down where? To that yellow daily point of interest. Our 5-minute buyers are waiting there, and again, pushing it right back up. But will it come back up again, close with the blue volume up there? Or are sellers going to push this down? Again, we can wait for a body to officially close above there. And we'll stay with this for a couple more minutes, and then I'm going to do Nasdaq as well, guys. Okay, so stay tuned for Nasdaq. We'll look at that as well. Tech is doing really well today. Okay, so now we have a nice big body bullish candle after the retest of the daily point of interest. So again, we're breaking out up here. So there's 3 minutes to go. So again, it presents us with another situation to take the impulse candle again. And we can go through this similar situation. Do we want to take the impulse now that it retested the daily point of interest, got a nice wick, got some volume, or would we like to wait again for this body to officially close? Okay, so it's trading real choppy. So again, I'm going to wait for it to close. But if I do take an impulse, I'm going to lower my risk so that I'm not too much. I'm putting too much risk on this impulse candle, because again, if it comes back down and puts me in drawdown, I don't really need to panic. It could be a speculating trade, because you are essentially speculating before volume actually closes. So there's 2 more minutes to go. It is trying. This candle is telling me that it did not get above the previous impulse high. You can see its high is a lower high right now. Will it come up and take out this high and create a new higher high? And will it close with some volume above while it does that? Or is it going to just have a lower high and get pushed down again? So we're coming right back up to the highest point. Can it push above the previous high? Essentially, to continue this uptrend, making higher highs, higher lows, and higher highs. Now we have 90 seconds to go. We got the volume filling the prior wick. Will it create a new higher high? Will it create tweezer top highs, or will it create a lower high? Okay, so what I'm looking for is the previous wick right here. So I can see that it is a lower high by just a few points there. And again, they pushed it right back down to that critical hourly point of interest right here. So now we got 60 seconds, 1 more minute to go into the close. Again, will they close it with some bullish volume above here, or are they going to bring it right back down? Is the volume going to come back up and take out this high? Maybe we can figure out where 50% of this volume is. Maybe we can catch a retest on the next candle. What do you guys think? Do you guys think that this body is going to close with volume above this white line, or you guys think it will come back down and get rejected and close within our consolidated box? Last 30 seconds. This is really important. Okay, so you see now it got filled up again with nice bullish volume. So it's coming to test that previous high. Again, it still hasn't taken it out as of yet. I can zoom in and we can look at it like here. So again, I'm looking at 50%. So if we get closing volume, 50% is essentially like right around there. So maybe I could potentially get maybe a pullback buy here. Okay, will it take out that high? Will it fail? Look at, okay, so it could open ignited blue and just break out of here. Look how short these wicks are. Okay, so it is ignited. That's that official breakout right now. Where does it essentially want to go? It wants to fill maybe up to these bodies right here from 8:30 when the news started this morning. Okay, so it did break out. It did create a higher high. Now, if the sellers can push it down, I could be looking to maybe entertain a pullback buy in this green box. Okay, again, I might miss it. The market may not come down to me. So this is the game with when you're patient and you're waiting for it to come back down. It may not come down right now on this bar. It might take 2 candles, 3 candles, 5 candles before it comes back down here. But what I'm looking for is to come back down, maybe retest that nice middle body right there, and then maybe there's more pending buyers that will come in and take it back up. Okay, so it's still just fighting this area right here. Okay, so what did we learn about this candle at least? At least we saw that it closed with the volume above this important area right here. That candle alone did not take out the high. It needed help of its previous candle. This candle, if you remember, opened, ignited bullish, and it just popped just a tiny bit, creating a higher high. That's important to continue an uptrend. But it also encounters some pending orders up there, and they're currently pushing it back down where it's this small doji candle right here. So I'm still waiting to see if I can maybe get a pullback buy in here. Otherwise, like if you're going to consider to buy this candle, if you put your stop loss like below here, then the market could come down here. But remember, I'm waiting to buy in here. So your stop loss could get triggered where some patient buyers are waiting to buy in here. And if it's not this candle, it might come back down at a later time. So what do we have above us? What I look at is there could be a top up here. Like if we look at overall up here, look how much like resistance there is up here. If I'm trying to look at the zone over here, like right there, if I put those together, I can see that there is some sort of supply up here. If I bring it across, I can see that high of the day impulse break right there to the purple line. And if I bring this across, I can see when we had our news at 8:30, the CPI traded in there. So if I bring this across right here, it could fill, like I was saying, right up to that red box. And then that's where maybe it could get rejected and come back down. And then I'm looking for that retest to maybe buy in here and then take it back up. Okay. I don't know if you guys trade with this type of style where you wait for pullbacks, because I'm telling you, as a scalper, even though that I scalp 1 minute candles, 5 minute candles, sometimes I got to wait 15 minutes for a pullback trade. Sometimes I got to wait 30 minutes, 1 hour. I know some traders are not used to that. They're not used to waiting for 1 hour for a trade. But if you start to learn that principle, you can maybe start to clean up a lot of your mistakes and look for better entries. But it just takes a little bit of patience. And a lot of traders are lacking that patience today. It took me years and years to learn this. But thankfully I learned, because it did help me become a little bit more profitable. And we'll look at Nasdaq as well, guys. Okay. And this candle too is going to close now in 45 seconds. So it's kind of consolidating up here, but it made that new higher high. Okay, so now it's coming down near the close. That's a heavy candle coming down. Okay, that's a right down to our spot here. That's exactly where I was looking for a buy, but we have 30 seconds to go on this candle. So I'm going to essentially let it close, because it might close below that area what I was looking to buy. If it closes below there, the next candle might drop even further. Okay, so then maybe I get a pullback buy if I'm looking at these bodies, or maybe back down to the yellow line down here. Okay, so you see how now that candle is coming down heavy with 10 seconds to go. Where will it close relative again to this box here? Is it closing above? Is it closing below it? So it gave us our opportunity to get in here, but let's see how it's going to close. So it closed right in it. So we open black right now. So will it take out this low, or will it flip right now? Okay, and if we flip, maybe I'm going to buy right above it when it turns blue, because it's right back above the green box. Okay, see how it flips blue? Okay, see how it got rejected again? I'm watching that carefully. So will it come back down lower and take out this low? Will it hold in here? Will it come back up blue without breaking this low? Okay, there it is. Okay, I'm going to buy now. Okay, so I'm going to buy, and I'm taking it to take out this previous high and to trade up to possibly this red box up here, somewhere inside the red box. I like to maybe target 50% of it to see if it can fill up there. Stop loss. This is the suggested stop loss when you place this tool. I'm going to place my stop loss below. I'm going to give it some room to breathe. I like this yellow daily point of interest. It already got tested, so I'm just going to place my stop loss below that wick and hopefully get protected. If it comes back down and collects more buyers, I'm protected by this daily point of interest at 29.16. Okay, so I'm in the buy. I waited for it to come down. It did not break that low. I was watching, and as soon as it came back up and flipped blue, that's when I bought. Okay, so it came right back up to this resistance point. It's not breaking, it's coming down. So now we got to see if the candle will continue to fill with blue volume and try to come up here. It could get rejected and come back down and trade in here. And then where I'm looking, if it cannot hold, maybe right here, will we find buyers in here? Okay, so I'm in a buy currently. Testing to see if we can get more blue volume trading above this green box to build up here. So that was a fail. It failed. It came right up to here, right back to those bodies right there, exactly at 29.19, and that was a failed attempt. So what it's telling me is there's strong sellers right up here. So we came back down. We picked up more buyers. We picked up more volume. Now it's coming back up to that point. Now this should technically break how we picked up some more volume down there. We picked up more buyers. So if we can't break with this attempt where we grabbed more volume, then it's telling me that we have some serious resistance right here. Okay, so hopefully with that nice grab down there, now we're breaking. Okay, but we have this long wick right here. Can we fill it and then pop a little bit more? Can we also close with blue volume above this red line and build some structure right here? And maybe if it comes back down, now we're retesting the red line for support and we can continue with higher highs. Okay. So now I got to watch. Will it continue to make a new higher high? Will it make tweezer top highs, a lower high? Right there. That is now tweezer top highs, equal highs. Can we just punch out a little bit with some new volume? At 29.20. Oh, so right there, it's ugly. It's a tweezer top high, but it came back down, collected volume. Can we just break a little bit just to create a new high? Okay, how are we doing, guys? Do you guys understand now? And now we're a minute and 20 away from the close. So you see how naturally 50% of the volume could be right at this red line if we break and it comes down. That would be, this is how I learn about 50% of candles, because it comes to previous structural areas, and that can naturally be 50%. Okay, we got a new higher high break. So guys, remember, from here to there, that's approximately 15 pips. There's 22 to the red line, and if we can get up to the all-time high supply box, or sorry, not the all-time high supply box, that's that 5-minute box, could be 30 pips up here. If it hits 30 pips in the red box, this is where I'm going to reduce all risk, and I'm taking my stop loss to break even. I can do it right now. You guys are welcome to do it, because we are approaching a serious resistance level up here. Okay. And now we have 30 seconds to go. So you see how we tapped into that body and body. We tapped into that red line and it got pushed down. So we do have resistance there. Now again, where will the volume close? So what I was saying is, if we can hold and make this like our 50% zone, if it comes back down, we're building some structure below us. Right here, we're building above this box, above our daily point of interest. We're coming right back up. Okay, there's the close. So you see if it pulls back, we got a nice bullish ignited candle. So it just popped, but we have big supply here, big supply. Look at where this was CPI's news, where we got rejected there, rejected there, rejected there. So this is a pretty good move coming right up to that supply. Let's see, it's currently about 23 to 25 pips up there. If we can just break through here a little bit, I'm going to take my stop loss and go to break even up 25, 30 pips hopefully. Okay, so that's the candle we want. Lower high, pushing. Let's see if we can drive with this now. Just a little bit of volume. You guys are welcome to adjust your stop loss at any time. You don't need to go to break even right away. You can go from here and put it, you're reducing your risk to there. You can go right there. You're reducing your risk. That's completely up to you. My job on these calls is to help you guys understand risk management. So see how it popped? I'm now going to break even, okay? I know worst case scenario, this trade can come down and hit my break even and I give up 25 pips. But this is now where you got to think about, do you want to scale out a little bit in this big, large red box, or do you want to see if it can fill these wicks and continue to go through here? So this all has to be, on spot. You got to think about this, guys, because markets move fast, especially for scalpers. So sometimes you have to decide quickly what you want to do. You got to plan the trade accordingly. So you see how it came in there? Quick rejection coming all the way back down. So you see how I have it targeted, this green box? If it comes down, will it hold this and go back up? If we lose this box, we're losing majority of our fair value in that big blue candle. Then sellers could break it and come right back down there where I'll get tapped out at break even. Okay, and then we'll talk about the trade. We'll see what did Ron do good, what did Ron do bad, and we'll learn from myself. Okay, so do you guys understand why sometimes when a trade goes to a destination that I have marked out, I take out 50%, I close out 80%, and I leave the rest running? Because this has happened to me a million times. I can't even count how many times a trade has came up 20, 30, 40, 50 pips to a zone. I don't do anything up there, and then it comes all the way right back down. Okay, but in this situation, look how it came all the way down. I'm still holding the trade. It's still above our green box, and we got our buyers coming right back in, pushing it right back up. Can we flip this volume and maybe close above here blue? Now we have half the candle, 2 minutes and 20 seconds to go. Where will it close? Will it turn into a bullish pin bar? Maybe a hammer candle, and we can continue to drive. So you see how this zone still protected us? Even though I have a break even, it's still protected. Now we got our hammer candle. This is what we want. Now we want to fill these wicks and cut through this supply. This is where could be hunting for stop losses on a lot of sellers. This is where you can cause a short squeeze in the markets, where a lot of sellers here have their stops up here. So we're coming after those stops. Right here is 30 pips. If we can continue to fill the top of the zone up there and break a little bit more, we may trade into this wick and this wick. This was from 5 a.m. right before we hit our high of the day. And then this wick right here was exactly CPI news at 8:30. So you see that we're making a full retracement up to the news. There we go. Perfect, guys. If it closes above this red box, then what I'm going to do is make this red box green. This might be temporary demand and continue to drive up to that daily high. Okay, guys? So please manage this trade as much as you can, because we're coming to the top of the supply. That's 35 pips. So I'm going to scale out 75% up here myself, because there's 1 minute left. We're at the top of the box. I'm closing 75% of this trade at 35 pips, and I'm leaving 25% to run with a break even. Hopefully it runs for that daily high and takes it out. But I don't want to leave 35 pips on the table, guys. We trade to make money. We trade to eat. And this is, I got to do it for myself. As much as I want to educate here, it's a pretty good move. Excellent. Emmanuel, done. 1.4%. Perfect. And guys, how much drawdown did we incur? Nothing. No, zero drawdown. I allocated my stop below here, but didn't encounter any drawdown. Just continuing to reduce my risk as much as possible. Now just got to manage the profit. Look at now, we're coming up. Will we close above here? Because if we do, quickly I'm going to make the red box green, yeah, and look at 50% of this blue candle. So watch. Here's the close. Where is it going to close? Okay, so it closed in the red box. So what I'm looking quickly at is 50% of that blue candle right there. That's 50%. Sorry, I was late on it. That's 50%. It just tapped into it, and we could be driving for a new higher high. So you see how it just pulled back right into about 50% of the previous candle. If we can continue to maybe, but we haven't closed with volume above here. So I cannot technically change the color of this box yet until we get a body close above here. What do we have now? We have those, oops, I don't want to move that. We're breaking there, 40 pips. Let's see, take out CPI's high right there. There's CPI's high. That's a 45 pip move to CPI high. Broke it. Ooh, shit. Look at us, 50 pips. What's the daily high up there? That could be 65 pips. Whew. So runners are running. I secured good profit. I don't want to get greedy, because you know when you get greedy, this market slaps you around. Okay, I don't want to get slapped around. Wow, guys, look at that. Oh, like when there's beautiful price action, I have to admit, like I'm passionate about price action. That was such clean volume. It was all because how it was coiling up here when we started the call, and now we're benefiting it by being patient and disciplined. You know, we didn't get faked out, because those fake outs could have really rattled us. We could have got pissed off. We could have made some silly mistakes there. Just wait, guys, patiently, and look it. You can hit your daily goal just like that. Okay, so if this body can close above here in 3 minutes, this big red box could turn green, and any pullbacks could be developing here, and we could be driving. But at the daily high, at the purple line, you know, it's a daily high for a reason. Okay, so we cannot get too greedy up there, guys. I know we want more, but that's a daily high for a reason. You see how they pinned it right at 5 a.m. exactly. Okay, so don't get too greedy. And this is also trailing stop loss as well. You know how I have my 25% of my break-even runner? If this closes above, I'm going to put my trailing stop loss maybe at this red line, so I can secure all of this below me. Holy shit, we might be taking out that high of the day. Halftime now, 2.5 minutes to go. Again, it came up there. We didn't tap into the purple line. It's a lower high just from a few pips. And look at the, excuse me, guys. Look at the psychological number, 29.25, exactly up there. Sorry, guys. I got a little bit of a bug, and I just got to drink some here. Is it safe to buy gold right now, Kishnar? I wouldn't buy up here. You see, we bought down here. Why would we want to buy the highs at the high of the day? That's the worst move you can do. That's FOMO buying. And essentially what they could do is slam this down. If you want to buy, you got to wait for a pullback now, maybe in this zone, maybe in this zone, maybe down here again. We bought right here. Why would I want to add an order at the highest point when it's moved 70 pips almost? That's a no-no in my books, but good question. It's a great question. If you do, I would go with something very small up there. You're speculating. Yes, it could break, but they could hammer it down. The trade was over here. Wow, guys, look at the volume. Holy shit. Okay, so what's above the purple line? If we do break right now, we gotta figure this out. Right there, wick and a wick. Right there, red line. That's where we could potentially move. 29, 26, 46. There's a double top right here, right here. There's a box. There's a zone. See how I do this, guys? I go back. I look. What time was this? Wednesday, 11:45, similar to this time in the morning. Bring it across. See how we tap right in there? When was that move? Friday, March 7, 10 a.m. Bring it all the way currently into today's price action. And I got now a few zones above me, a few levels above me if we continue driving. Okay. Here's the close in 30 seconds. So I pay attention to this. to see how it will close, where it will close. Where's 50% of the volume? Is 50% of the volume going to be naturally where this wick is right there? No, they're coming in hard right in the end. Let's see this. Kishore, yeah, thanks for the update. I shall wait for a good entry. Yeah, it's just you don't necessarily want to buy the highs of a move. You will kind of want to buy a discount, the pullbacks with confirmation. It's a mistake I used to do all the time. I used to always add at the highest point, and then when I was looking at my journal, when I close out the trade in drawdown, it would always come back, and I'm like, why didn't I just wait? And I could have entered there. And so, but as long as you're learning. Okay, so next thing, we got to go through our routine. Like sports players have a routine every single day. We got to go through our routine. Did that candle close above? Yes. Can we therefore make this red zone green? Yes, we can. So stretch it again into the future. If it comes all the way back down in here, that might be a good area to continue to buy in here. So what happened? It came right up almost to that high of the day. It's actually a lower high. If I pin it right there at the high, it's a lower high pushing down. Look at right there. See that red line from that wick? You see how essentially it's already 50%? This is how I learned this shit, just by looking at it. If I place a box right there a little bit above, a little bit below that red line, you see how naturally, look at the start of that candle, open, close. If I grab my Fibonacci tool right now to show you guys exactly, I'm not guessing this stuff. Grab your Fibonacci where that candle opened and closed. Right there. Do you see the 0.5 is right there on that red line? Right there. Like the candle essentially builds itself. You just got to look and pay attention to it. So now we're getting the pullback. It's coming down. Let's see if it will hold here. If it comes all the way back down and holds, maybe a higher low, that's even better, that it doesn't need to tap into our box. The buyers are saying we're asking to trade above this box. We want to protect this. We want to continue to push it up. They're still holding it. Now you can see that there's a lot of selling pressure. Again, pushing it back down. Will it come back down all the way down to the low and break and tap into our green box? Or are the buyers protecting it and coming right back up? That's where the candle almost flipped right there. There's a spin top. It could essentially flip blue now. And then you got a bullish pin bar to continue to fill the wick and maybe drive to the high of the day. And you guys are welcome to secure anytime, guys. This is good for education, but we can learn and earn together. Did you guys understand? Hit the likes on YouTube. Let me know on Zoom. Did you guys understand that setup? Did I explain it properly? Did you guys understand my thought process, my psychology behind this? Remember all of those fake impulse attempts there? We had that nice body close. I figured out where 50% of it was. I didn't buy that candle. I waited for this to come down. And then when it went right back up, I bought, and then we got the next push. We got the next push. Good. Bruce, you got it? Trading Zane? Awesome. Captain Boom, my man. Good, guys. Awesome. Captain Boom, 80% out, break even for the rest. Excellent, man. I love that. Like, that's music to my ears. I love that shit. Marius, why is US 30 getting smashed so much comparison to NAS? Tech is up. I said that. We're going to get to Nasdaq in a moment. Tech is, look at your big securities right now. Go to your board, go to your watch list, take a look at your big name securities. What's going on here? Let's see. AMD is up 2%. Micron up 5%. Nvidia up 4%. Excuse me. Tesla up 5%. I think because Donald Trump has a new Tesla now. Everyone's happy about that. Palantir up 2.5%. SMCI up 4%. You can see the tech sector is above 2, 3, 5%. So Nasdaq is comprised 65% mainly of tech, and US 30 is a little bit of mix of everything. You got retail, you got your Costco, your Home Depots, you got your oil and energy, you got your banks, you got just a little bit of everything. So right now, tech, you can see how the liquidity, the money supply is moving into tech currently. Okay, so I'll stay with gold to see if we can get a daily high break, and then we'll move to Nasdaq, okay? Jitendra, does does this price action work in Forex also? I just got gold, the 50. It works in everything. Everything. It works in your everyday life, right? If you go right now and you buy a coffee, okay? Let's say a coffee is $2, a nice coffee from Tim Hortons. And hopefully we can get a sponsor from Tim Hortons one day. A coffee is $2, right? What happens if I go tomorrow and that delicious coffee is $1? Like, I'll buy two of them. I'll buy one for myself and I'll buy one for you. I'm getting a good deal. So it's just 50% is a nice discount. When you go shopping, you know, when you want to buy a nice clothing, you want to buy a sweater, it might be $100. And then on the weekend, they're going to put it for 50% off. Then you can go in there and buy it on discount. Why are we not using the same type of psychology when we're shopping for securities in the markets? Like, that's what I was saying to that gentleman. Why buy the high when you can buy a potential discount right here or here? You just have to wait for it to come down. You know, when there's a sale going on at the mall, they might say the sale starts next Saturday. You have to wait until next Saturday. So same thing here. What if I tell you the sale is going to be in the next 30 minutes, in the next hour, we might get an attempt here. We have to officially wait for it, guys. Trading is not hitting a buy and sell button. That's just part of the actions. Trading is the waiting game. Some traders are just more patient than others. That's it. This is the markets are just a financial system to transfer wealth around from the impatient traders, investors, banks, institutions, corporations to patient traders, retailers, institutions, corporations, right? So I can wait all day patiently in order to get paid from the markets. When I was losing a shit ton of money, I was always buying the highs. I was impatient. I never thought of waiting for it to pull back. I always thought right now it's going to continue going. But how much higher could it go when it's already moved 70 pips right now? Okay. You might get an extension of 10, 15, 20 pips, but the risk to reward is not worth it. Guys, that's a fantastic move. We might even close with some volume above the daily high. Okay, so, oh man, wow. Maybe we got to start these calls at 10:20 every day, a little earlier. We caught this move because we started earlier today. Fantastic. Whoa! Holy shit. Yeah, guys, unfortunately, there's only 44 likes on YouTube for this set. I don't know what else to do with YouTube. I don't know. You might not see us much longer on YouTube if we don't get any respect for this. You can go and pay courses if you can get this type of education. That's on you. We give it daily for free, and we can't even get a like here. 130 viewers, and there's 44. It's sad, guys. I get sad. I'm going to cry after this call. It hurts my feelings that you guys don't appreciate this. I can't figure out YouTube for the life of me. I can't. I'm sorry, guys. But holy shit. Guys, you can secure a little bit on the runner. That's a 90 pip move. If it closes above here, okay, I'm already considering this block right here. If we can close with that volume above. If it retests this, will it still hold? Will it still build? We might even be closing with volume above this red line. Remember, I came back in the past to see that red line? Mafuz, I agree with you. Quality education, no likes is sad. Yeah, I don't know. I don't know what else to do. People don't even appreciate free stuff in life. You know when they say nothing in life is free? Can't even appreciate this. Wow. Okay. So what time is it? We got to look at the time. We got almost 11:15. Oh, is that what it is, Jitendra? I see a lot of price action streamers don't get much likes and views, but smart money concepts and ICT streamers get a lot of that. Well, if you want to follow that, go ahead. You know, I find that more complicating. ICT strategies, this, that. I don't know. I keep shit simple. I'm a simple man. Wow, guys. Okay, what are we doing? Forget about the likes right now. What are we doing? What's everybody doing right now? We got to be in the money. What are we doing right now? Okay. Are you using a trailing stop? Is anyone holding the entire trade without scaling out? If you are, tell me who you are. Wow. You got some big balls. This is, if you're holding this, congrats. Like, I want to just extend my congratulations to you guys. Anybody holding this entire move? If you are, you're going to buy me and Dave a coffee tomorrow. Trading Zane, you're letting your runner stretch its legs out. I love that. Oh, Dave is holding the entire thing with a quarter lot size. Nice, nice. Dave, what are you thinking? Can we get up to 29.30? Look at the closure, okay? So you see this red line. Where did I get this red line from? I looked all the way down here. Friday, March 7, 8:35 news, and also right here, Wednesday, March 5th. So we closed with volume above it, okay? So you see it's almost 50% of that blue candle. So we're essentially coming back down. Will it retest and hold that red line? Will it be a higher low? Can we flip this candle? See, the wicks are very, very short. If we can flip this candle, we could drive 100 pips right up to 29.30, that heavy, heavy resistance. If we go to the daily, let's go to the daily now. Let's just observe this trade on the daily. Okay, look at what we got right now. We're part of this daily candle right here. Like, you see these other daily wicks? That's where 29.30 is. That wick right there last Friday, and that wick right there last Wednesday of March 5th. So you see today's daily, if we keep filling up, we could essentially break, look at the 29.35, trade into 29.40 up here. If this runner keeps running and wants to stretch its legs, and it's maybe got some sexy legs up here, it maybe wants to continue to drive. So we're part of this. We bought like right in there. Right there. We bought the break of yesterday's high. You can go back and back test it and see for yourself what we did here. You know, I always do that. When I take a trade, whether it's a winner, a loser, a break even, I always go back and look at it and study it and see what I did, so maybe I can fix it to the next day or repeat it if it's a good trade and learn from it. Okay, so now it's coming back down. Are you guys okay if I go off of this and we do Nasdaq really quickly and I can come and revisit this? But that's a W. Throw a W in the chat, guys, if you you understood that. We're going to move to Nasdaq right now, okay? But first, we're going to just have a little break here from our sponsor. Our sponsor is Uncle Ronny. Uncle Ronny is saying, on YouTube, guys, you guys have a pinned Telegram channel at the top. It's free, guys. We love free stuff. This is it here. So you can always join us in our lives. These are our signals here. Wow, the Dow at Wall Street market open right here. This is during Dave's session with all the snipers, pipping and dipping, learning and earning in there. Everything we offer here, guys. Our free blog, Trade Like a Business, Not a Casino. That's the recipe for success. Right here, come to our website, stocksnipertrading.com. Go to our blog. There's a lot of useful free stuff here for everybody. Trade like this. Everyone wants to gamble in these casinos. It's not the recipe. That's a recipe for disaster. Treat it like a business. Like right now, if you hit your daily goal, walk out of the markets right now. Stop. That's it. You did your job. You went to work. You clocked in. Clock out now. It's lunch break. You know what I mean? Get out. Now go enjoy the day. Right now it's spring break with my kids. I'm going to spend the rest of the day with my kids. Have fun. You know, you can hit your daily goals if you do it smart. Three biggest mistakes we make. How to overcome these. What are they? Lack of trading plan, poor risk management, emotional trading. How many times do we go over this? We got to correct this. We got to fix this stuff. If you want to learn anything. Guys, we also have our 6-day boot camp coming up Monday, all week, and Saturday. It's going to be 6 days. Very comprehensive boot camp about crypto and Bitcoin. You can see how busy each day is. It's 2 sessions each day. If you want to see what we're covering, everything is here. You also get an additional 3-month exclusive plan with us at SST, where you get all of our trade signals, you get all of the education, you get to be part of the Discord group, and all of the lives with myself and Dave. Okay, so let's just get right back into the markets with Nasdaq. I'm going to leave off of gold. I trust you guys can manage this yourselves. Hopefully some of you guys pipped, you dipped, you are at break even, you've scaled out a little bit, you got runners, it's all good, okay? And now let's move to Nasdaq. Oh, this is a little recap. Remember yesterday's call when we ended the call where I was saying this was 115 when I had to go yesterday? Remember when US 30 was coming down here and I said, guys, if it closes kind of above here, I'm going to be scalping this guy on the when I get out of here. Do you see how it came up? It built. Look at this candle right before 2 p.m. Eastern. Here was your clue yesterday. You see how it came down, tested this and came right back up. And then look at 2 p.m. The new hourly candle, it is also a 4-hour candle on most securities. And look at how it just pumped right out of here and moved all the way up. That was a massive move right after we ended yesterday's call. And there's that last minute liquidity grab right before time and sales. Look at these sneaky moves these market makers do. Pick up on these clues. They came down just right before 2 p.m. to take all of those stops out of there, clear the board, and then they got the money and then they drive it, okay? So let's take a look at Nasdaq today. What is the nasty Nasdaq doing? So we're going to do a quick top down. Okay, quick top down. We're not just going to jump in on the 5 minutes. So we're going to start off with the daily. Wow. Okay, so key areas. We've mentioned this quite a bit. All-time high supply up here. Okay. Are we up there yet? No. Okay. We're nowhere near all-time high supply. This is a market sell-off. Okay. It could be a corrective pullback. You know, we don't need to panic as of yet. We still have a massive uptrend making higher lows, but we lost this critical support structure right here. We lost that zone. Okay. So we are trading below that zone right now. So it's going to be red. This is where it held support here. There we close below it and continue to push down. Okay, so you can see that it's really breaking down. Do I have any points of interest? Absolutely I do. Right here, this is a point of interest. Yellow line right there. We're below it. Okay, why? Because right there, you see that pullback, the wick, and all of this, it held there. 19,925 held. Now we're actually got volume below. So this yellow line is now resistance going forward. Do we have another kind of point of interest? I would say like right around here. Let me see, right here. There was support. And then I can see we broke it right here on Monday. We broke it on Tuesday, but we still have the volume above this yellow line. So 19,369. And if we continue breaking, do we have other points of interest? I would say right here is another point of interest. If it continues to sell off, I'm saying right here. Okay, and you see how I'm just basing my analysis? I'm looking at that wick, that body that saved the market. Here was a drop. There we closed above, and then we got the volume above again. Okay, so if we continue to drop down, I'd like to see some type of support being created here. If it continues to fall, do we have a demand area? Right here was easy supply. You can see that. With this, make it green. Okay, you see how we closed above it. Look at the retest where it came into it, and then we pushed all the way up. Continue with stretching this into the future. There I see a massive liquidity grab on Friday, August the 5th. Monday it came all the way down there, but right back up. Volume closed above the box. There's the pullback. So, you know, if you waited patiently, these are multiple days. But if you're looking and you had an alert here after a couple of weeks when it came right back in that box, that's where you could have bought with minimal to zero drawdown, and you could have made a shit ton of pips. So let's stretch this into the future, that green box. That's where, if Nasdaq comes all the way down here to 18,500, that's where I expect to see big buyers. If we cannot hold this, you know, you're breaking down critical higher time frame structure. So now what's going on the daily candles? We've been pushing down, lower lows, lower highs, lower lows, lower high, close below here, lower lows, lower highs, continue, lower lows, lower highs, and now we got these choppy candles here. Okay, so what I look for now is this candle. Look at the size of the body compared to these. Open, close. Can we identify where 50% of that is? Yeah, 50% is right there. And you see how it is represented by Friday's low and our high of the day right now, right at 50%. Okay. So you can see that we're still below 50% of this candle. It came up all the way up there today and they rejected it back down. So let's follow how everything, that's a key point of interest. It's also our low of the day right here. So I go purple line. Okay, so what happened? We closed right here. They gapped it up. They came down. Low of the day. We were really bullish. Okay, it was blue, blue, blue. We took out yesterday's high and we traded right into 50% of the volume right there. And we got rejected. So that yellow line is essentially our high of the day up here. So I go purple line. And what happened there? We got rejected. So you see from this point and that purple line, this is where I can draw a red box right now. I use my purple line as point of interest and bring it right there, and that is a red zone. So if we continue to come up here, you're trading in supply. Okay, if you're a daily trader and you're looking for like momentum to switch, we got to see a daily candle close blue above here to retest this to maybe continue to retrace its way back up. Okay, as long as we're below this red box, it's telling us that there's still sellers in the market and can continue to push this thing down. So we got rejected up here and it's coming all the way down. This is how much volume we have left in the candle that is still bullish. The sellers could exhaust all this and then start breaking down further. So if we break down further, point of interest is yesterday's low, yellow line right there. Okay, and you got to understand now, we are not in a bullish trend. Look at, like, count how many candles you have here. 2, 4, 6, 8, 10, 12, about 15 candles. So this is about 3 weeks, Monday to Friday. You got lower lows, lower highs, lower lows, lower highs. Okay, so the buyers are trying, but they're counter buying and then they keep getting rejected. They're trying and then they keep getting rejected. So we're still in a bearish trend right now. So we got to get confirmations again to close above there. So what we can do now is we've done a little bit of daily analysis. Let's go now dissect like surgeons and go into the hour. Let's figure out what's going on here. So look at the hourly, like making lower lows, lower highs, lower low, lower highs, lower low. Okay, we got tweezer bottom lows over here on Monday, so that's kind of holding the market, and since then you got a higher low and a higher low, so it's slowly building off of the bottom. We got choppy price action for most securities. Everything is choppy across the board, but do you see what I'm looking at? Hopefully maybe you guys can see what I'm looking at. I see this big hourly candle at 10 a.m. Can I determine where 50% of that black bearish volume is? Right about there, I would say. I place a white line for hourly. So that is still 50% below there. So the buyers are trying right now. Can they close it above 50%? Are they going to get rejected back down? Do I have an hourly support right now starting? Yes, I do. That's where the candle closed at 10 a.m. It opened. It came down to the low of the day. It's coming right back up. So this is a good support that started the last 2 hours right here at 19,456. Can we continue to build off of this white line, or is it going to come back down low of the day and break? Okay, so right now it is trying to come up. If we put like a trend line from down here, we can see that essentially it is ascending. If you want to make your trend line and match it with the wicks, you're welcome to do that as well. I kind of go hug the bodies as much as I can, like a natural trend line. See that? How I put it at the bodies. I put it kind of right here at the bodies. I see that spike down. They came down there and grabbed the liquidity, but you see how they closed it right above that trend line again? Again, we came down, we touched it right at the daily low, purple line. And again, we came down here, and then the volume is still above. So we are still technically ascending, but we're not creating, we're not getting above this. So we do have higher highs on this move, pull back, higher low, a new higher high, pull back. Can we start to continue to drive up here? So what I watch on the lower time frames now is this white line and this white line on the 5 minutes. So these are our 5 minutes. Wow, lots of volatility with Nasdaq today. So we traded into the red box, came all the way down. Here's our 5 minute candles. So this was a good buy opportunity. This body closed above. It came back down, right down about 50% and came right back up. You know, if you're sometimes when you're in a buy for just 2 bars, you can net yourself maybe 15, 20 pips. That move up there, it's actually a little more. With this volume, it's 60 pips. Okay, so Nasdaq is really moving. Do we have some areas that we can look at on the 5 minutes? Yes, we do. This is where I use now my red line here. Right there. You see how 5 minutes held support, 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 and we continue to push up. We came down to the red line right there where it broke, came up, hourly white line, huge bearish candle at 10:55, dropped the market all the way down to like pretty much low of the day, and 11 a.m. we're coming right back up. So I like to watch at the hourly area right here where it used to be hourly support in the market there. Bring it into the future. Now that I can see it, it's easy, it's visual. I can see that it's getting rejected and rejected. So right there is my hourly resistance. Okay, so it could come all the way up here and go back down. And then what are we doing? Are we going to buy a pullback? Are we going to maybe see if it breaks out of here, close above, retest this, and continue driving? Do we see maybe any fair value gaps in here? That what I can see is where these 5 minute candles started to build. That was the lowest retest right there. We still got this nice blue volume down here. That's where I draw my green box at this untested volume. We haven't came and retested this. So that's my, maybe if I can get a pullback buy, I'd like to buy in here. That might produce the double bottom right above the low of the day. So what I mean is this leg coming down, we're coming back up. Okay, that's the big neckline. That's the big for the W. Are we coming into it or lower high? If they push it right back down, are we going to find some support at that hourly white line, at the trend line, and our untapped zone right here? Maybe if it comes down there, that's that second bottom that could continue to push and break through here. Maybe hold, close, retest, and continue to drive this afternoon. Okay. There's a Sniper Pro signal on Nasdaq. Let's take a look at it. What do we got? Okay, so it just came in 5 minutes ago. Look for buys on Nasdaq above 19,488. Let's see, 19,488. I kind of just look at the structure too. So 19,488. Okay, it's right up here. We're looking for buys above. I'll put a red line there. Right here, this structure. Okay, so there's wick, 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 holding. Okay, this is roughly 19,488 here. I can wait for a pullback to test this. I could wait for maybe a deeper pullback. Again, this is that question we had earlier. Should we start to buy right now? I look like similar like our gold trade. We could have bought in there. So I feel like if we're buying right now, we're buying at the highest point, trading at the hourly resistance. Yes, it could potentially break out of there like impulsively and then come right back down. So I kind of don't buy the highs. It's just a rule I have, you know, because I've already missed out on a nice retest right there. It's just, I don't know, guys. I have rules when I trade. That's why it's maybe difficult for most traders to understand having rules, because some traders trade without any rules and they wonder why they're losing in the markets, because the only thing that's different from some successful traders is they have rules. They got a trading plan. They follow it day in and day out. They're not worried if it does break out for an extra 10, 15 pips. Because like I'm just looking right there. Had I bought that high, I'm in drawdown right now. What if it cannot hold this and come back down here? Then I'm in further drawdown where I could just wait for a possible pullback. And then that drawdown I would have been in if I bought the high, that can be my stop loss where I'm getting in at a better area. Okay, so it's all about risk management as well. Okay, so can wait for this to develop. Let's take a look at gold. Okay, so what's happening with gold? It came all the way down, closed at that zone. Next candle opened. See, we're now still below 50% of this bearish candle. They continue to push it down. So we're below this right here. So this is a red box. Okay, this is still a green box. See, it came down. Look at what it did. It came down and it retested the green zone, came back up, and now we're continuing to move back up. So remember when I said a trailing stop loss, you can place it below a structural zone and you could be still live. So you see how it didn't hold this one. This one was a minor zone, and then it came down to this one. This one is still holding, and this one is still holding. Okay, and then you got a nice strong answer by the buyers, bringing it right back up. Can it close above here again and build and maybe continue on its way up? Okay, so that's gold continuing to move. If your runner is still running and it's still going, Nasdaq. Okay, so it's coming up to this identified resistance area. It's getting rejected. It's going to close now in 7 seconds. Just going to move this. Any questions, guys? Any questions? And are we breaking a current trend? So again, if you want to do trend lines, the trend is your friend. Okay, so you see how we were pushing down. This body did break the trend, so we are pushing a little bit. Will it come back down to retest, give us a nice pullback entry? Or if this body can confirm breakthrough here, close above, maybe the next candle we can buy on confirmation above here and then continue riding this this bullish move up. But we'll see in 4 minutes when it closes. So I don't trade direct breakout. No, I do trade breakout. I am a breakout trader as well. But I understand if I'm doing a breakout trade, like for example, if this blue candle starts to break out, I don't assume it's going to come all the way up here. Okay, what I do is the most logical breakout. If it breaks out, it wants to trade maybe into 50% of this candle right here. So this is how I do breakout trading or impulse trading. And this is how I know exactly what I'm looking for. Right there, 50% of that candle right there. So if we do get a breakout, it could break out, and trade right into that and get rejected back down. So if that's a trade that I'm entertaining, a breakout trade, I measure it beforehand. I see if it comes up there, that's 27 pips. Okay. So if it fills from there and just comes into 50%, total move is 27 pips. What happens if it just goes like halfway? There's 15 and then it could go back down. So if I know that that's what I'm looking for, as soon as I get 15 pips, I take my stop loss to break even. If I can get the full move to trade up there, I could be closing the entire trade, or I could just be scaling out. If you got fast fingers, close 80%, leave the rest running. But that's a breakout trade. Like if I'm looking for it to break out, essentially might break out right there, break these highs, and trade right into this area. Why? Because look to the left. Look to the left. Keep bringing it to the left. You can see the structure. You can see how it held right there, resistance, and turned to support. Look at the wick held there. The wick was right there. The wick was right there. The wick was right there. And that's essentially 50% of that big bearish candle. So if we do get a breakout trade, it could fill right up to there and come right back down. Let's watch this. This candle is still building with 2 minutes to go. It's a nice bullish candle, ignited on the bottom. There was no pullback. It's got good volume. It already filled that prior wick, so now it's popping a little bit. But remember the difference between a short wick and a longer wick. When candles like this is a short wick. This, when it opened, this technically should have broke and continued to drive. But the market at 1055 said, no, we got to come back down and grab more liquidity. And now we're retracing all the way right back up to this move right here. So this is now a candle impulsively breaking above here. Let's see if it will fill, how much it will fill. Okay. And also where will it close? Will it close with volume above here? Okay. So this is technically a breakout of the resistance here. You see how it's filling? Okay. So remember what I said right there. That's 15 pips, 17. You can just pip and dip right out of there. Grab your 15 pips and just get out. This candle is doing what it's designed to do. It's just breaking out. That's it. And then you see how it gets a wick and can go all the way right back down. But some scalpers have already gotten out real quick, and they don't worry about how high it can go because that's all they're looking for. Those 15 pips, 3-4 of those trades a day, you've hit 50, 60 pips, your daily goal, done. But you have to be very, very, very disciplined. There's no woulda, shoulda, couldas. It could have gone here, it could have gone there. We don't know where this thing can go until it officially closes in 30 seconds. But you see how much it filled? Did it fill up to 50% of that candle? No. Right there, lower high, still that 15, 17 pips. Now it came back down, got more volume. Let's see if it will come right back to the high and break a little bit more. See now how it's attempting to come up? There's that resistance. Will this body close above here? Where will it close? Does that help, guys? Understand breakout trading. There's not a lot of people that will explain this. Okay? Look at where it closed. Did it close above? So technically, this is a red to green box. Okay, now we're retesting this. Where's 50% of this big bullish candle? Open, close. 50% is like right below the green box. If it comes in here, how it's coming in, right there, will it hold? It's black. Okay, so will it break? Will it come down there, catch a wick? Will it catch a wick in our green box and flip? That might be a continuation to continue buying. Or we wait for natural pullback to come into maybe here. But these are all areas where I'm considering to buy pullbacks. Right here, I can place an alert. See the red line? It's already there. Add an alert here. Yep. So we've added an alert. So if it comes back down, that might be an opportunity to buy. But it could continue driving. Okay, so you see how it held the green box? Okay, so still hasn't broke. It's coming up, but it's a lower high. The volume is still concentrated in here. Oh, wow. You think it does help? Just in the last 30 minutes, your perspective has changed about how to read the candles. Okay, perfect. That's excellent. See how you can learn a lifetime of what I learned over 30 years, you can learn in 30 minutes. If you really pay attention, you can learn fast. That's amazing. So it took me my entire lifetime to learn this stuff by staring at candles. If you can pick it up in 30 minutes, I've done my job. I've saved you a lot of years and a lot of headaches and a lot of financial loss. But just be disciplined, guys. That's it. Just be disciplined. I don't know. I don't know how to explain this concept. I know I could possibly miss out on a trade. That's fine. But I know that there could be a better opportunity. I just got to wait. You just got to wait. A lot of traders are not paying. And you do not need to stay at your trading station how I am right now. You can put an alert in the market and you can walk away. You can go make breakfast. You can go outside. You can stay close to the home. And then if you get a notification, you can come back and then initiate and look. So if I leave and then it starts to pull back, I'll get an alert in there. And then maybe I can come look at the trading station. Maybe I see it's double bottoming and then maybe I can buy. So throughout the day, I put alerts and signals, whatever security I'm trading, at specific areas. And I don't essentially sit here for 6 hours, 8 hours a day. I can go on with my day and have my levels marked up. Okay, so you see how it came down black? It's still holding right into the green box, coming right back up. We have 2 more minutes left on the candle. So is it going to turn blue? Is it going to continue to trade above the green box? Will the sellers near the end bring it back down, close it below? It's kind of consolidating right above this area of demand. And then we have a new 15-minute candle opening in 2 minutes. Okay, gold. Okay, so gold. See how it closed above? So same thing. Change this red box to green. You know, the same zone are static. I don't change the size of the box. Just continue to change the color depending on the volume. There was the close, retest, and continuing to push. But we have this big bearish candle behind us. So the buyers are trying. They're trying. It's still building a little bit. We never broke down here. So it is still bullish. Continuing to push. We are above the high of the day. We're creating a new high of the day. Can they continue to bring it up to this big supply area? Gold still looking bullish. Let's see, Nasdaq. Nasdaq holding. Hammer, bullish pin bar candle. 1 minute to go. Let's see the close. Will it fill that zone? So like trading inside a zone for 10, 15, 20, 30 pips, that's micro scalping. You're looking for small moves. And my strategy is when you learn how to do this with experience and confidence, and you know exactly what you're looking for, and you know how to adjust risk, and you know if a trade tags you out and you lose, you have to understand all that. So what I look for when I'm trading in here for 10 pips, 15, 20, I like to trade with standard lot sizing. That's just how I learned how to do this. I look for small moves, not greedy moves. 15, 20 pips with a standard lot can turn out to be 150, 200 US dollars in a matter of minutes. So I don't have a crazy daily goal. I'm not looking to make $100,000 a day or $10,000 a day. I just look to make a nice modest daily wage, get in the market, and get out. I look for a couple of those trades a day, and you're done. But practicing, you got to practice with 10 cents. Learn how to do it with 10 cents. If it goes up 20 pips, you're up $2. If it goes down 15, you're down $1.50. But learn from it. Eventually, maybe you can get to those larger sizing. You can do it with a prop firm. If you purchase a 50,000, 100,000, 200,000 prop firm, you have the ability to trade with larger sizing. If you learn how to do this. If you don't know how to do this, do not do that. Okay, and then you can see now we are now consolidating above a zone of demand. This is now that neutral area right now. Okay, so you see how it's now consolidating in here. It could continue to essentially push out of here. So I know I'm waiting for that pullback, and I still haven't got the pullback. I know that I possibly missed out on a buy opportunity. Okay, but again, we can sit here and talk about this all day, every single day, every single call. I understand I missed out on a potential buy, but I'm waiting for that pullback. So you got to make up your mind at some point. But this is still running. It closed above, retested, and still moving. Again, this goes against my rules. I don't want to buy the high. I know it could continue to drive, but I've been burned so many times. I can't even tell you guys how many times I've been burned by doing that. By buying the highs or selling the lows. So what I've figured out is wait for a healthy pullback. As this is going up, it's not just me and you that are waiting for pullbacks. There's entire institutions, there's an entire depth of market that is waiting for a pullback. The depth of market is building and accumulating as I'm speaking right now. So it's not just me that wants to wait to buy in here. There's larger institutions than you and I can even imagine. They're all positioning themselves here for a pullback. So we got to kind of think and trade like how they do. And sometimes, some days you get the pullbacks, some days you don't. Okay, so let's just take a look at gold here. Gold is still holding above here. Again, all of these I extend into the future. I know it starts to get messy after a while. You can start to clean up and modify your charts if you like. Let's see if there's any news in the markets, what's going on. Let's see the US markets. S&P is up 0.3%. Dow down -4%. Nasdaq is up 1% today. Crude oil is up, and gold, we're trading it, is up right now. Target, okay, remember guys, taking a big hit. That forward guidance continuing to drop. They're trading at $109. They're probably down 10% right now since their earnings. Maybe we got to wait for noon. Okay, it's only 12 minutes away, but the new hour, maybe the new hour might provide a pullback we can maybe look for. Is anyone in Nasdaq buys? Nasdaq buys? If you are, congrats. Like with the Nasdaq buy and the gold, today's a fantastic day. Yeah, Sherry, I agree. Decreased spending for consumers because of uncertainty. Yeah, even their forward guidance, they're hinting. It all started with Amazon early in the year. They said they're um, worried about consumer spending this year. Then Walmart was next. Walmart was a big, big, big clue. They had amazing earnings and revenue because last 3 months was during the holiday season, Christmas season. So it's pretty much a given that they're going to have good revenue for that. But the forward guidance, they were saying this threat of tariffs is going to hurt them. The threat of inflation is going to hurt them. Consumers coming in and purchasing, they don't see too much traffic anymore. So that was a big clue. Then we had like Target next. Target, same thing, smaller chain than Walmart, but same. And you can see how the market then started to sell off. If we don't have consumer confidence or consumer spending, then there's going to be dips in the markets. That's what we're seeing. Okay, so gold is continuing to move. Nasdaq. Okay, so what I continue to do is look at 50%, okay, of that blue candle. It's kind of it's still aligned with this 50%. We've moved away from this consolidated zone. So maybe the next pullback would be again in this green zone. So if it does eventually come back down into here, I could look for buys here. 19,545, see if it will hold, see if it will come back to the prior highs and maybe break a little bit. So I'm looking to maybe buy a pullback here. If it doesn't hold there, maybe I get a pullback buy down there, a deeper pullback. Stan, nice. You're in the Nasdaq buy from the signal group. Excellent. Good job. And just try your best, everyone, to continue to learn this. Like the markets will be fun in the next few years. Like you can see right now, they're tough, they're exciting. You're witnessing a tariff war between countries around the world. It does affect the markets. It's all maybe political. It's all talk. But if they do implement these, like you can see Canada and U.S. going back and forth, back and forth, back and forth, and then the markets don't know how to react with all this uncertainty, because it does affect supply chains. It does affect everything. Think about if you owned a business right now and you're selling a product, and every day there's going to be a tariff. No, they're taking it off the table. Then they threaten 50%. Then they take it off the table. Then it's tough to do business like that. So the market is going through a transitional period right now, across the board, across the world. But just trade accordingly, manage your risk. That's the best thing we can do. All we can do is manage our risk. Don't over leverage when you're trading. Sometimes you got to allow a trade to breathe. So don't be scared to give it a stop loss. You don't have to trade very, very tight with like a 5, 10, 15 pip stop loss, because you can see when there's volume in the market and volatility, you can easily be taken out of your trade within seconds. And you'll miss out on the move because you're trading too tight. So open it up if you have to. In order to open it up, it's simple law of mathematics. Bigger stop loss, lower your lot size. That's it. David, what if we have one world currency in the future? It's a possibility. I don't know if that would be a good thing. I don't know if it's a good thing, but I could see that happening. If it's a good, sound currency, it's fair for everybody around the world. It's pure. It can't be manipulated. Then I would be for it. Like right now with the fiat system we have right now, it's the most corrupt system we have. You can print as much as you like. That's what causes inflation and things like that. So I'm not a big fan of the fiat currency model. There's got to be other options in the near future. Bitcoin. We've got a Bitcoin boot camp next week, guys. 6-day boot camp learning all about Bitcoin and cryptocurrencies. We'd love to have you guys on that 6 days of. I will lose my voice by day 2 or 3, and I will be doing it with sign language for the rest of the week. But it's gonna be intense, guys. So I hope you're ready. If you want, sign up, guys. If you want to learn all about the crypto world. Bitcoin is trading just under 82,000 right now. We were at 110, the highs, pull back. Bitcoin is very volatile security. If you've been around this for years, you know that some pullbacks are 70%, 90%. Right now we got about a 25-30% pullback. But if you've been part of crypto, you know that there's massive pullbacks. But this is more of a controlled pullback. It's not that bad. So also pay attention to US debt. That's what I'm paying attention to. Like I was saying earlier, that $9 trillion is coming up for refinance within 2026, in the next year. So I think America's model right now is to try and lower interest rates as much as possible. So by using tariffs, they can naturally bring the interest rates down. I don't know if Powell wants to do this. I don't know if Powell has any ability. There might be people above him that tell him start lowering that interest rate, similar to what Canada is doing, and so that when it comes to refinancing all of that debt, they get it at a favorable interest rate. And the art of the deal, yeah, it could be the art of the deal. But just think about you and I. If we were refinancing our mortgage and you and I have the ability to move the markets and bring it down to where we get a nice favorable interest rate for the next 5, 10, 15 years, like that's exactly what's happening. So they want to lower the interest rates as much as possible in order to refinance that $9 trillion of debt, save some money doing that, and then with the savings, you can put it right back into the markets and drive the markets again to all-time highs. It's just speculation. I'm speculating, but I'm just thinking if I had $9 trillion of debt and I had the ability to move the market the way how I wanted to, I would do the same thing. Why not? Okay, guys, gold. I don't know what you guys are doing with gold, but it tapped right into 29.30. That's that daily supply. So if you go to the daily time frame, see what we just tapped into. This huge daily wick right here, Friday, March 7. This daily wick right here, Wednesday, March 5. Go backwards right there, the wick on February 26. So you can see how bullish today's gold candle is. So it's getting rejected from here. Again, you can consider this to be like a 5-minute candle. It might pull back. It might continue to fill up to the wick and break out even more. If it breaks out, you can naturally see, you can already measure how much it could fill. We got this clean traffic behind us. So let's look at how much more it could continue to fill. That's an additional 50 pips to fill that zone right there. Do we allow beginners to copy your trades? Absolutely. You can do whatever you want. I just ask that you use proper risk management. Some traders are learning. Some traders are taking the trades. Some traders are learning with us. But you can do what you want. It's a free country, free world. Just all I say is use proper risk management. That's it. Okay, so Nasdaq, we're getting a little bit of a pullback. What time is it? 11:57. So we're about 2 minutes away from noon. So there's a little bit of a pullback. Will it continue pushing down going into the top of the hour? Will we get kind of a reversal coming down? So we've had our first bearish candle coming down. It's coming right back up. Where will it close? Let's watch in the next minute and 40 seconds. And then also, if you're in buys on Nasdaq, also watch going into the hour. Like it just came down here, it's going back up. If this candle like flips, it could start the new hour bullish, and you could get continuation. So I'm not in this trade, but if I was, I would be watching this right now. So you see how it came down, and now it's coming right back up with 60 seconds to go. So if this closes near the high, you could get that momentum at the start of the new hour, just continue to drive through here. So if you're in buys right now and you're holding this, let's watch if we get that continuation going through here. Watch for like a ignited bullish candle open. Let's see if there's like a manipulated open. Maybe they gap it up and then they drive it down. Okay, so this is where I look for clues in the markets. I study closes, I study opens, I study the time of day. Look at how this candle formed. It was bearish, bearish, bearish with 2 more minutes to go at the end of the hourly candle. It came right back up. It's closing maybe possibly near the high. It's a bullish pin bar right now with 20 seconds to go. May turn into a hammer and continue. Let's watch the close. Okay, now it's a hammer candle. That's our second most bullish candle you can get. The volume picked up all the buyers and we could be potentially closing near the high. Here's the close, 5 seconds. And we're a new hour candle, okay? So opened, black. Okay, there's a little bit of a wick, so it's coming down. I still use the 50% rule even on that hammer candle. Will it still continue to hold? No, so it's coming down. Next line would be, will it come down and hold where that body is, right there? Will it hold there? Okay, all I did was body to body. And will it hold right there? If it can't, so you see how they opened it at noon? They brought it where it was bearish, ignited, and they didn't even allow it to flip that wick and drive. They wanted to bring it down. So it retested this point right here. So far this point is holding. It's coming right back up. This is a hanging man candle. You still have that bearish head when it opens. So there's some strong selling pressure, but there's good buyers. Bring it up. Can they flip this candle and continue driving? As they come up, they're getting absorbed by those sellers, and maybe it's going to push back down. Okay, if it comes all the way back down to the low, it could break a little further. So when I'm looking for pullback buys, I'm looking to see if it will come back down and break and go down a little further. So you can see how the majority of that volume is still engulfing that previous blue candle. Okay, so it's still bearish. Still buyers bringing it up, but it comes down. So we're kind of consolidating within the same candle right now. And if this flips, you could continue driving. If you're in buys, then you're looking to fill this wick, fill this wick, fill that wick, and maybe trade up to the red box. The continuation extension, if it does flip, you can measure the move so you know ahead of time. To come back up to there, it's approximately 40 pips. Okay, if it can flip and continue to fill, that could be a continuation of 40 pips, filling those 2 wicks and getting up to the top point. Okay, but right now still bearish. It's a hanging man candle, so you can see that how much selling pressure is in this candle. It's been absorbing. Every single time it comes down, it goes back up. Sellers are absorbing. Goes back down, comes back up. Sellers are absorbing. It went back down, it came back up. Sellers are absorbing. And now they can continue maybe to push it down by flushing it down. This is the halftime point, 2 minutes and 30 seconds. So we saw the first half of the candle, how exactly it opened, how low it went, where's the high, and how the volume is right now. So to me, it's still a bearish candle. Now it wants to maybe come down to the lowest point and break and go down further, causing a lower low. Let's see if the buyers can protect this area. Are they going to hold it, or will it be a new lower low? Where's the next level it could go to? 50% right there of this blue candle. Okay, so if it cannot hold there, maybe right there. But you see how it came down and flicked right back up? So there's good support still in this. But that volume is coming down heavy, selling pressure. And then we're going to close in a minute 40. Okay, so now they came back down to the low and they're pushing it down. So for the first 3.5 minutes, that red line, 19,591, held as support. But you can see how heavy this selling pressure is. Okay, the buyers were there. They were strong. Came down a little lower. They're stepping right back in. Where will this candle close? Will it close below structure, below this blue candle and this blue candle? Then we might get continuing selling pressure for maybe a potential pullback buy in this green box. And this all started at the top of the hour at noon. That's why sometimes when I'm in a trade and it's coming up to the top of the hour, I have a plan that I do something. Sometimes that's where I go stop loss to break even. Sometimes I scale out of the trade 50, 60, 70, 80%. Sometimes I close the entire trade because I have been burned multiple times in the market at the top of the hours because the market is manipulated at these times. So we're coming down, 40 seconds to go. Now I like to watch the close, into the close. Like a basketball game, you got the 24-second shot clock. You got to make a move in those 24 seconds or else you lose possession. So when a candle is closing, here's 24 seconds. Let's see the move. Who's going to be making the move? The sellers or the buyers going into the close? So far it came down. Buyers are pushing it right back up. Where will it close? How will it close? What will be the next bar that opens? We have a top already identified in the market, like right here so far. Okay, so can we determine where 50% of this bearish candle is? Where's 50%? 50% is right there. Okay, so if it comes back up blue, 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 and it gets rejected here, they could still continue to push it down. So let's see now if we've got a higher low, higher low, higher low. Now it's coming back up, right up to 50% of that previous bearish candle. Will they add some supply, some offers, and bring this back down? Or will the buyers bring it right back up? And then you can see how we're barcoding. Blue, black. Blue, it could continue to drive and break out of here. Right now it's holding good support right here. And then this is where it's flagging now. We're in a flag formation right here. So we know that Nasdaq is not going to trade in this little flag all day today. It's either going to make an attempt to break down here or it's going to just continue to break up to here. So right now it's kind of consolidating here where it came up, came back down. Coming up, will we get a breakout, close above there? Will they reject it back down? And let's take a look at gold. Okay, so gold is getting rejected. Rejected. The volume is starting to thin out a little bit at this area of supply. So let's see if the buyers have a few more pushes to break it out of here. Otherwise, you're starting to see the volume starting to thin out. Well, that's a clue that buyers are getting exhausted, and then a big seller can come in at this supply area and drop this down. Okay, so if you're looking for selling opportunities, continue to watch this volume here. And then Nasdaq, we'll see how it plays out. Guys, I can go for about 10 more minutes, and then I got to get my daughter ready. She's got a play date with her friend. That's the beauty of trading, you know. Maybe hit your daily goal and then go enjoy the day with your kids. That's what I do when I have the kids home with me. Otherwise, I get to enjoy the day for myself. Right now it's spring break here in Canada, March break, whatever you guys call it. There's no school this week. It's beautiful weather outside. 39 degrees Fahrenheit. For us here in Canada, that is, I'll be suntanning outside. That's warm for us. That's like, oh man. And then what I can do is, you see how the volume is concentrated in here? This is what I do too when I'm waiting. I can kind of like back test this area live. I look back. I see how it was kind of consolidating right here. Black, blue, and then they broke it down. If I continue to go to the left, I can see, you know, was there a majority of time where it was consolidating in here? Do I have any specific zones? Things like that. Sometimes when I'm not in a trade, I'm like kind of back testing where it is right now. Sherry 68 in Texas. That's nice. Better than us. I love that Texas heat. I'll be coming down for the Dallas Cowboys very soon. For another disappointing year with the Cowboys. Okay, so you see Nasdaq is still strong, guys. Okay, so nothing closed below. You know, here, that's why I marked this area. You got a body and a body. You had a break, came back up. Break, close back up here. You got a nice bullish candle answering, closing in 1 minute. Maybe this candle will close above. Maybe we can buy the next bar, continuing to drive. Or we pull back into 50% of this volume. Okay, so this will now determine if we close above here. This may be kind of continuation going up. So there was a little pullback, but it didn't come into the desired zone that I wanted it to come into here. Okay, but I can't make the market come to where I want it to go. Gold. Whoa. Wow. Holy shit, Dennis. The runner has really sexy legs. Oh man, guys, that is ridiculous. Holy shit. Wow, so it just broke right through there. That was that imbalance on the daily. Let me show you guys. I'm sorry, because I wanted to watch Nasdaq, but this. Remember I said that clean volume to break through here on the daily? Was it the daily I was showing? Right here, this zone. Guys, this is where you can look for clean traffic. That's a clean traffic fill. I'm sorry I didn't show this to you guys, but remember when I marked this up from here to there. You see this big black candle, how it just dropped through here? This is what we call clean traffic. And you see how it just filled that imbalance right through there? That was that measurement from here to there. That was that additional, remember I said an additional 40, 45 pips? It actually went even higher, an additional 60. But what it did is it filled all of that imbalance right now. So you guys, you have to understand this, please, because if you figure this out on how it looks on 1 minute, 3 minutes, 5 minutes, then you can become a better scalper. Then you know what it just did. It filled that imbalance right there. Okay, and then this is how it looks on the 5 minutes. There was that fill from right here right up to there. Easy fill. Wow. So I do the same thing, repetitive action. Look at that big body candle, determine where 50% of it is. If there's pullbacks, let's see if it can continue hold. This red zone now, it's green. So, you know, you can continue to look to buy off of these zones today, buying the pullbacks. If you're trying to continue to sell, look at what you're selling against. You're selling against a very, very strong move that started at the start of our call. Wow. Okay, so guys, you know, sometimes runners can go for 175 pips. Like, runners can run if you get the volume. Unbelievable. Nasdaq. Okay, so Nasdaq opened, retested. You know, if you were buying in there, the retest, it filled right up to there. You could have got a quick scalp, but I'm waiting for bodies to close. Guys, that's it for me today. I'm not feeling the greatest. I got a little bit of a bug in me. You probably can tell in my voice. I'm all stuffy here. I got a little bit of fever. But absolutely amazing. Captain Boom, that's you done for the day. Gold met today and tomorrow. Time to run the dog to the vet and lose my pocket money for a month. That's okay. That's why we trade. We trade to take care of our dogs. We trade to take care of our family. We trade to take care of our family. Our dogs are our families as well. But congrats, Boom. That's amazing. Sherry, excellent day, guys. Today, I hope someone learned something. I'm sure that someone learned something new on today's session. If you learned something new today, be kind and hit the like button. It allows us at SST to know that we're going to continue to do this for you guys. And it lets us know as educators that you guys are learning and you guys are doing well in the markets. So this is amazing, guys. Tomorrow, just look at our schedule. Tomorrow, what time are we going to start? Tomorrow, what are we, Thursday tomorrow. So Dave, if you guys want to join Dave, 8 a.m. to 10 a.m., doing really well with gold and indices. Coach Dave will be on tomorrow. This is all private Zoom with Dave. He's a very shy guy. He likes to be private. So go show him some love in the Zoom. And then with me, I'm not shy. I'm out here teaching every single day. I'm out here. Maybe we'll get Dave out of his shell and we'll bring him on here too. We'll bring our eye candy out here for you, all of you guys. And tomorrow, join us 10:30, and we're going to go a little longer tomorrow till 2 p.m., okay? We'll navigate around the markets. follow the news, follow the markets, and let's have a good session. Okay, guys? If you want to join the team, we would love to have you guys. Free blog, everything is available for you guys. Just continue learning and earning and making the best out of the markets. I know some of you guys, you got to do this to take care of the family and things like that. Some of you guys are got a lot on your shoulders, you know, but just continue learning, guys. Don't gamble these markets. Trade responsible, and the markets will take care of you if you take care of yourself in these markets. Stay healthy, get rest. Don't sit at these computers all day. Move around a little bit. You know, if you're sitting at that computer for 2, 3, 4 hours, just go outside, get some fresh air, and come back. If you have your zones already charted with alerts, you don't need to spend all day at the station. Continue to move around. Look at this, guys. Like the retest. Okay, continue with this. So don't fight the trend. Like you got a strong trend on Nasdaq. It's continuing to drive. Guys, congratulations. Some of you guys are in the Nasdaq buys from the signal right over here. There it is. So we were looking above that 19,488. This is when it came down, grabbed liquidity, held at this structural area. If you drew a box from here, drove it across, you see how it's still holding. The market came down, 11 a.m., scooped that liquidity, a nice V bottom recovery, close again above. And this is where some of you guys took your buys here. And look at it now, moving up to 600. That's 125 pips. Good job, guys. Great day. What a day with Dave and now. And don't get greedy, guys. If you've hit your daily goal, walk away because the market can change. Remember, at 1 p.m. we have our 10-year bond auction. Anything can happen in the markets. The markets can turn and switch, and you want to keep going and keep going and keep going. You might lose your daily goal. Just now, if you want to continue trading, I'm a guy too. If I'm in the rhythm and I'm continuing to go, and you still want to trade, what you got to do is lock a certain profit right now. You got to make this plan right now. So for example, if you traded and you hit 1.5% of your daily goal today, an exceptional day, and you want to continue trading, don't trade with your whole 1.5% and just let it ride. This is not the casino. So what we do is lock it in. Preserve either 1% or 1.25%. Lock it in. And then just trade with the remaining, maybe 0.25% of your profit or 0.5%. And regardless what happens with that, if it comes back and you get stopped out, the market is telling you you are done. You can still walk away with 1% or 1.25%, but the market is telling you that's enough. That's enough. You know, the market is telling you. Okay, so that's if you want to continue to keep trading and keep compounding, keep building, or just walk away with that daily goal. Okay, we'll see you tomorrow, guys. Excellent session today. The volume cooperated today. We'll see what tomorrow brings us. And continue to follow all of the wild news in the markets. I do follow it. I live in Canada. I have to follow the tariffs here. You know, and America is our neighbor. And I got to follow exactly what America's lead is too, because it does affect the financial markets that I trade on a daily basis. I hope it's just kind of talk here and there about these tariffs and things like that. But it's the world we're living in right now. We have to adapt and change the way how we trade according to this until things settle off. Okay. But we'll see you guys tomorrow. Have a fantastic day. God bless everyone. And thanks everyone on YouTube. I appreciate you guys. If you can kindly leave us a like, subscribe, hit the notifications, and everyone on Zoom, go enjoy your afternoon now. Have a great day. Thank you guys. I appreciate all of you guys for learning with me. Thank you.
Hey guys, good morning. Welcome to the live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.